From Forex Traders Daily, this is your daily analysis with Ross Mullins, live from Richmond, Virginia.
Hello everyone, this is today's video analysis for October 31st, 2016. I hope you had a great weekend and are ready to get started trading this week. In today's video, I'm going to do a general overview of each of the U.S. currency pairs in anticipation of this week's trading. And I'm going to highlight some of the key levels that we will look for entry and exit opportunities. This week's news calendar is quite full, so we could see some increased trading volume and volatility. This is a good time to evaluate your risk management plans before a high volatility week. And you'll want to be sure to check your financial calendars for the latest releases. Okay, let's get started here with the USDCHF, the dollar franc. Here in the long-term view, the daily time frame, we've zoomed out. We can see that this currency pair for much of 2016 has been in a wide angle range. You can see the big black box on my chart. It's been stuck inside there. In fact, the last several times, or at least the last 3 times that we've touched the top of that range, it's bounced off it. And last week was no different. It hit the top of the range and now has bounced off of it. Now, we could be looking at a point of reversal if the news this week points to more dollar weakness. We could be looking for some reversal. Of course, if the news this week goes to dollar strength, we look for this to turn around and go back up. So that's some of the things that we'll be watching for this week. Further evidence of reversal to go down, or the market to turn around and go back up again in the direction of what really has been the trend for the past several weeks. Let's go ahead and zoom it in here on the daily time frame. You can see the blue trend line here has been going up. There it is, touching the top of the range last week and reversing and going back down. The orange shaded area is going to be our key point of interest today. Let's go ahead and zoom it in one more time. You see the orange zone at the top of the chart. That's 98.95 up to 99.10. 98.95, 99.10 is the orange zone. So if we can stay below there, if it stays below there, we look for resistance, like what we see over here where this little black box is, and the potential to continue to go back down towards this purple shaded area, which is 98.50 or lower. On the other side of it, if today reverses and goes back above the 9,900 level, we could be looking for the resumption of the uptrend, or at least challenging back towards the blue shaded area. So that's really the orange shaded area is going to be our key point today. How does it close today? Does it stay underneath there? Does it get back above it? Those are some of the questions that we need to see today. I think for the day today, as long as it stays underneath there, if you're looking for intraday trading opportunities, you're looking for shorts underneath the orange shaded area. Take it down to the 4-hour time frame. And again, it doesn't really change what we just said. Underneath that orange zone, we can see the left-hand side, resistance underneath it. That's what we're going to focus in on today. 98.95, 99.10, underneath there, resistance, potential falls back down towards the purple zone, mid-98s. The risk, of course, is that it breaks back above and goes back to the blue zone for the dollar franc today. Euro dollar, similar but opposite. Of course, over the long term, we could see that over the past 3-4 weeks, a couple of months, or actually back into late July, early August, we could see that it was going down over the past couple of months. Pretty decent fall. The dollar in a pretty good run over the past couple of weeks, and is pushed all the way down into the 1.0800s. Last week, we saw it sitting underneath resistance. Let's go ahead and zoom it in. We were sitting underneath where the blue circle is, underneath the orange zone. Thinking that it would go down, we actually took sales underneath that orange shaded area after it broke underneath it. The market had a little bit of a different idea late Friday with some news, of course, out of the political realm here in the U.S., causing it to turn back higher and pressure back towards the 0.990, 1.1 level for the euro dollar. Interesting, finding resistance there again. So the blue zone obviously is our main area of focus as resistance. It's sitting underneath there. If you're looking to go short, that's the better place to do it. Don't do it now. Let it go back up to the blue zone and closer towards the upper 109's 1.1 level. Of course, the risk here is that it breaks above the blue zone. If you're looking to go long because of the quick reversal that we saw on Friday, then the closer it gets to the orange shaded area is your area to consider that. If it dips there, holds there as support, that could become an opportunity to go long. And of course, the breakdown of the orange zone will likely see the continuation of the downtrend back to the green shaded area at the bottom. I think this one's a little less clear than the U.S. franc, so maybe switching gears to the franc this week rather than the euro dollar. Moving on over to the GBPUSD, status quo. Nothing really new here that we talked about last week. Didn't talk about last week. The big black box here. This is the 4-hour time frame, by the way, so we can see that we've been stuck here for quite a while. inside here, the blue, green, purple, and orange shaded areas. Look at this green zone. Look at the congestion there. We're towards the bottom of the range, so I'm cautious about going short at the bottom of a range, because going short at the bottom has the potential for support and reversal. So if I'm going to go short, of course, it makes more sense to let it go back up to the purple or maybe even the orange shaded area before I would go short. Going short under the green zone, your profit potential is very limited because the support is the blue zone at the bottom. Three reasons to go short. It either goes back to the purple, orange, or breaks out underneath the blue zone. If you're looking to go long, the closer it gets to the blue shaded area, 2100 or so, 1.2100, becomes a possibility for that, but just know that you're trading against the longer term trend if you decide to go long on the GBPUSD. Take it over here to the USDCAD. For the short term, mid-term, we have been in an uptrend. Look at the blue trend line. We've been going up. We're making highs into multi-month resistance highs. You have to go all the way back to the left-hand side of the chart we're looking back into March, the last time we were here, into these price levels, into the 1.3400. So we haven't been here since March. That's all the way back here. Look at this blue box, the left-hand side of the chart, resistance into that same blue shaded area. So if it gets through the blue zone, where does it go? Well, it's easy to see back here on the left-hand side. The purple zone becomes our next target. If it doesn't go through the blue zone, we could look for some intraday reversal. Let's go ahead and take it on down to the 4-hour time frame. Take a look at what's been happening. Let me zoom in one time. Over the past couple of days, we waffled around this orange zone. We broke above it, went to the blue zone. Take a look at what's happening. Friday, of course, the spike higher into the blue zone, but now reversing, coming back down into the 1.3370s. Not really confident here. There's no real confident move here. So what we're looking for, if you're going to go long, obviously it needs to go down first. Probably back down here towards 1.3350. 30, that's the orange shaded area. That at least gives you lower risk, because your risk at that point is that it breaks back under the orange zone, which it had a difficult time doing here, and goes lower. Above the orange zone, of course, you look for targets back to the blue zone. And at this point, if we're going to see the continuation of the uptrend, it will have to break the blue zone, which is 34.35, before it'll continue to go higher. So really, we're watching the blue and the orange zone today, and maybe probably much of this week. A break above the blue zone continues the uptrend. Under the orange zone could be the reversal we need for the dollar CAD. Moving over to the US yen. I would say right now we're in an uptrend. Look at the red trend line. We've been moving higher. We're above the 100 period moving average. We've actually made pretty good money on the US yen over the past couple of weeks buying this currency pair within the period of this uptrend, the red trend line, after it broke above the green 100 period moving average. So it's been a decent profitable opportunity. I don't think there's really anything to change our minds about that. It's kind of trying to decide what to do with this 105 level right now. Let's go ahead and zoom it in one time here on the daily time frame. The blue shaded area is the 105 level. Of course, late last week Friday we got that political news that caused the dollar to take a little bit of a hit. It caused this to turn back lower. But overall, if you just kind of erase that political news we got on Friday, the FBI probe, this is still in an uptrend. There's nothing really to change it. It was a knee-jerk reaction to that news the market had late Friday. But I think this is still an uptrend, and I think that's the direction I'm going to continue to focus on until we get some economic news, which we could. I mean, we have the BOJ later on today that could cause some stir here for the yen. We have BOJ outlook, policy, monetary statement, all of that coming up later today. Probably will change the entire environment here for this currency pair, but we'll keep an eye on that. But until something else changes, I think we remain in the uptrend. We're targeting resistance highs, which at this point is into the 105.50, 80 level, the yellow zone at the top. Staying or holding underneath the blue zone could be the clue for a reversal. I think you need to be very cautious on this currency pair, especially with the BOJ news that we have coming up much later today. So keep an eye on that for the US yen. Moving over to the AUDUSD, long-term downtrend. I need to show you that weekly time frame, red trend line. Take it on down to the daily time frame. This is why I keep showing you that, because it's been multiple weeks just toying around with that trend line right here, the red trend line. And today is no different. Let's zoom it in a couple of times here. Today's no different. Look at that red trend line. How many times it's touched it? Top, bottom. We are above that today. And in fact, 1, 2, 3, and now the fourth time sitting on top of the 100 period simple moving average. Look at that. The green wavy line. 1, 2, 3, and now the fourth time. So it's clear to me that today, as long as it sits on top of that, we don't want to go short. That's the biggest thing. Don't go short right now. If you're going to go short, you need to go up. You need to go to the purple zone, maybe even as high as the blue or the green zone up here at the top of the chart, or potentially break down through the moving average, through the red trend line. That could become your opportunity to go short, but don't go short on top of the 100 period moving average in the pink shaded area. We do also have some news out of Australia, interest rate news out of Australia much later today, 11:30 p.m. Eastern U.S. time. So that's something that you'll want to make note of if you're trading at that time of day. Likely some volatility, but I think right now overall we're short, but it's a difficult place to do that. Maybe some intraday buying opportunities here into the 75, 90, 75, 75 level. 4-hour time frame really doesn't give you any help. Truthfully, it doesn't give you any help. You're sitting on top of the pink zone. You don't want to sell into the pink zone. If you're going to sell, you go short into resistance. So at least 76.20, 76.35 becomes your best opportunity for that. Then you hope for the breakdown of that 100 period moving average, the pink zone, the red trend line, and a continuation lower. Just look at this pattern. It's rises and falls. So if you're going to go short, you want it to go up before it goes down. And at least the purple zone becomes that opportunity today for the Australian dollar. Moving on over to the NZDUSD, we have some significant news out of New Zealand as well this week. Employment data coming up tomorrow, actually. The first day of the month, we have employment data coming out of New Zealand, 5:45 p.m. So you want to make note of that going into tomorrow. But overall, there's two different trends we're dealing with. The black trend line, which is the uptrend, the blue trend line, which is the downtrend. And right now, we're bouncing between the two. Let's go ahead and zoom it in. Look at the blue and the black trend line here. We hit the black trend line, went to the blue trend line, and now we're just consolidating between the two. 100 period moving average is above the market, so that gives me a little bit of a hope for the downside underneath the 100 period moving average, underneath the blue trend line, and underneath the yellow shaded area will be our focus today, much as it was last week. So let's go ahead and zoom it way in here. Underneath here, we potentially have intraday selling opportunities. Only on the breakout above there, that yellow zone, 71.75, do you look for it to go up? Much of last week, we focused in on selling this yellow shaded area and made profit back down towards the blue shaded area. So that's, I think, it's status quo. I don't think there's anything to change that. We have news over the next couple of days that could change all of that, but today, for the day today, I think it's status quo. Resistance, you're selling resistance, targeting lower. Your risk in that scenario, of course, is the break of 71.75, so you're using appropriate risk strategies. If it breaks there, we're back to the green zone, which is into the 7200s again. So at least right now, focusing in on that yellow zone for intraday selling opportunities for the New Zealand dollar.
From Forex Traders Daily, this has been your daily analysis with Ross Mullins. If you would like to get Ross's analysis on all the currency pairs he's watching and all the trades he takes today, join him in his live trade room by clicking on the link below. Please leave any comments you have about today's video in the comments section below.